Many of you guys have been asking me to create a video on inducement, and today, right now, right here, I'm about to teach you everything I know about inducement. So, what exactly is inducement? Inducement is simply the liquidity resting above or below the first pullback on an impulsive move. Basically, the liquidity resting above or below the first pullback on an impulsive move. So in our case here, since we are in an uptrend, if we are about to identify the inducement, of course we'll be checking on the first pullback, the liquidity resting below the first pullback. Since we are in an uptrend, we can clearly see that our trading range ranges from that low to this high. This is our impulsive move, and the first pullback on this impulsive move, we can clearly see that it's this one here. And so the liquidity resting below this pullback, this first pullback, the liquidity resting below this first pullback is the one called inducement or IDM. And by the way, it doesn't matter if this first pullback appears before the break of structure or appears after the break of structure. Yeah, so it doesn't matter if this first pullback appears after the break of structure or appears before the break of structure. It doesn't really matter. It still counts to be the inducement. And since the inducement is the liquidity resting below the first pullback, that means that if price makes another pullback right here, if price makes another pullback before taking out the initial one, or before taking out this one here, then the liquidity shifts from this one here, it shifts now to this other one here, and so the inducement becomes this one, because we said that the inducement needs to be the first pullback. And so our trading range now, it will be from this low to this high right here. So right here, before price takes out this initial inducement, it ends up making another pullback on top of it. So the inducement now becomes this one here, because this one here is the first pullback on that trading range. And so our trading range, of course, now shifts into here. So the break of structure, of course, will be here, of course, just like this. And now we'll be waiting for price to reverse to take out this inducement, maybe mitigate some order block right here before reversing now to make a break of structure and making ourselves a new trading range. But this has an exemption when this pullback formed above the break of structure is deep enough past the 38.2 of the Fibonacci retracement. Let me show you in detail. So right here, as you can see, price has ended up making another pullback before taking out the initial inducement. So in this case, should we take this inducement? Should we shift it here since the inducement is the first pullback? Will this be right? No. First, we need to make sure that this pullback formed above the break of structure is not deep enough past the 38.2 of the Fibonacci retracement. So right here, if I take my Fib tool, right here, raise it until there, and actually marking obviously the 38.2 and showing off the percentages so that I can see how this is. We can see that this pullback is deep enough past the 38.2 of the Fibonacci retracement tool. This showcases that this pullback is no longer a pause but a corrective move. Now we have something like this. Let me deduct this Fibonacci tool. So now that means now that this inducement will not be shifting here. It means that now the change of character will now be shifting from there to here. So this will be our new change of character, and of course our new trading range will not now be that one. Of course now our new trading range will be this one. Yeah, and of course our new trading range will be this one right here, with this one here being a break of structure, because this retracement was deep enough past the 38.2 of the Fibonacci tool. So this is an exemption when the pullback was formed above the break of structure and this pullback is deep enough past the 38.2, then this one here will no longer be an inducement. But if price comes and breaks past this one here, then this one here will be qualified to be a change of character. It will not be an inducement being taken out. And the last but not least case scenario is this one here, when there is a pullback inside another. So by that I mean, like, you can see right here there is this pullback in between here. So which one here will be the first pullback. As you can see, this one here can be the first pullback. You can also say this one is the first pullback. You can say this one here is a minor first pullback and this one here is a major first pullback. Alright, so now which one here will be the valid inducement? Now, in this scenario, you will not consider the inner one or the minor one as the valid inducement. You will consider the major one to be the valid inducement. So in this case, we will be waiting for price to take out the major inducement before we may consider to enter the trade. So on the next video, I'll be showcasing the same, everything that I have taught here using a real chart. So stay tuned and see you in the next video.